Good morning, everybody. Welcome to another Daily Market brought to you by Mike Bjork. Today is Tuesday, and it's February 20th. Hope you guys had a nice long weekend here. Enjoyed, hopefully, President's Day off. I know some people have to still work, but hopefully most of you guys at least had the day off and got a little extra rest. Uh, this week, kind of light on the calendar here. We got nothing planned for today. No, nothing on the calendar today. Tomorrow will be the kind of more of the heavy lifting, so to speak. We'll have the big one will be the FOMC minutes will be released right around 11 o'clock Pacific Standard Time. We'll get that one. That will be kind of the big one as investors want to kind of delve into uh, behind the scenes as to the notes behind the last Fed meeting as to, because we've had some inflation news, they're getting kind of a little spooked. They want to see, what the Fed's thoughts are, if that's just kind of temporary, if or it's going to be, a trend with inflation increasing, and then therefore potentially with this more hawkish group that we have now compared to the last meeting will be potentially uh, increasing rates. So if they, of course, are raising rates, that's going to affect the stock market in terms of borrowing costs to corporations. And will go up, stuff like that. And then, so therefore, the yields won't look a little bit more enticing to them in terms of where the stock prices are currently at, because they're at pretty high levels that they might go into in yields. So stock and spuds. We'll go to headline news. The stock market is currently about mixed. We do got a slightly stronger U.S. dollar. It's improved a little bit, so that's kind of a little bit on their minds right now in regards to the stock market, especially for the multinational corporations, regards to our exports. That might affect the exports a bit. So let's take a look here at the bond market. As again, we got kind of a light day, so just kind of run through this for you guys. As you can see, we're still on the downward trend. In this trend line, we're up on the upper part. We had a decent day on Friday, but today we're down currently about 19 basis points from where we left off. So that's going from this level here where we left off. Right now we're here. So we started off even lower, but again, we've tried to fight our way back, but unfortunately it's not doing a great job so far this morning. So our pricing is worse in terms of interest rates, or rates have climbed up a little bit today from what we left off on Friday. And then we got the excuse me. Then we got the 10-year Treasury, so we got that upward range here. We did start off a little bit lower than, or actually we started off higher, excuse me, because here's where we left off on Friday on Treasuries. Right now we're up against at 2.9. We're pushing up against this overhead resistance, which has been pretty strong so far. We're hoping that it maintains itself, because if it doesn't, it becomes a floor support. Next support will be at 3.0, 3.04, and that could push rates even higher. So this right now, this overhead resistance is keeping a lid on where interest rates currently are. So let's keep our fingers crossed that this holds for a little bit longer. Over long term, I see this obviously going to break, and at some point it's going to go. But in the short term, hopefully this keeps a lid on for a little bit longer here. All right, so that pretty much wraps everything up for the day. If you guys want to get more updates, just come over to Twitter. I do post throughout the day on Twitter. I'm at Mike Bjork on Twitter. Hope you guys enjoyed the rest of your day, and we'll look forward to see you guys tomorrow. Tomorrow will be more laden with economic data for this week. Friday we have no data. Thursday we have the weekly jobless claims as well as the leading indicators. So again, you guys have a great day, and look forward to see you guys tomorrow. Thanks again for watching. Bye-bye.